Let's get some more analysis on all of this, and we're joined by Stan Shamu from IG in Melbourne. Stan, great to see you there. Also, of course, in focus today, we've got the Bank of Japan meeting and confirmation, well, at least from the Japanese finance minister, that that sales tax hike is coming.
Yeah, absolutely. I think Japan will definitely be the market to watch in Asia today. Of course, already we have seen the dollar-yen just remain within striking distance of that 100 mark. It's currently trading at about 99.77, but it's really threatening to push higher in Asian trade. Of course, the US dollar is in better stead at the moment, with economic data just continuing to show positive signs, and of course continuing to ramp up this tapering talk. So from a US dollar perspective, the trade is definitely looking good. Now from a Japanese yen perspective, of course we do have this sales tax hike that's been confirmed by our Finance Minister Aso over the past week or so. Of course, they're looking to hike their sales tax from 5% to 8% and then to 10%. So it's a two-stage tax hike. Of course, this is in an attempt to repair their balance sheet, which has been struggling for a while. And of course, as well, this might be a bit of a dampener in terms of it ruining or derailing the economic recovery that the country has been working on for such a long time. As a result, they have confirmed that they will probably look at an extra budget for fiscal spending to help counter the effect of the sales tax hike. And of course, now there is a lot of talk that perhaps the BOJ might have to act to help stem the effect of this sales tax hike as well. So especially with the BOJ due out today, then there might be a little bit of anticipation that they might start to talk around the sales tax hike and exactly what they might do to counter the effects of the sales tax hike. So while a lot of people still think it's a non-event today, the BOJ, there is still a lot of room for them to comment on this sales tax hike. Of course, Finance Minister Aso is actually going to announce this at the G20 meetings of the weekend to the rest of the G20 leaders. So it really seems like this story is gaining traction now. With the Nikkei, we're actually calling it up 0.5% today, and it's set to trade above 14,000 for the first time since August the 14th. So it really does look like it's going to be a positive start for Japan, and there's plenty to look out for from that market today.
Okay, and what about the Aussie dollar? I mean, continuing its rally there up to around the 91.87 US cent mark. What's driving this?
Yeah, the Aussie has been doing well across all the crosses really this week, and of course this was triggered by that positive China manufacturing PMI data earlier in the week, and it's just gradually extended its gains following that commentary from the RBA, and of course the GDP reading yesterday as well. So it's really in good stead at the moment, and looks like it will continue to rally up into that 92.50 level in the short term. Of course, it's not just against the greenback. We've seen big gains against the euro and the yen as well. So there's plenty of trades all round in the Aussie crosses at the moment. They're really looking good, and it doesn't seem like unless the Syria situation escalate, it doesn't seem like there's anything much to really derail its rally at the moment. Of course, this squeeze higher has seen a lot of short covering as well, so people are scrambling to cover shorts from that perspective. And with the RBA looking like it might be on hold until next year, then it certainly will look like everyone will be looking to see a bit of a move higher in the Aussie dollar in the short term. Now, of course, today we've got the trade balance number, which is expected to show a surplus of about 0.1 billion. So there's nothing much in it, but anything positive at the moment for the Aussie dollar will be just another excuse to help fan it higher in the short term. So I think it's really risky business being short at these levels. Potentially at slightly higher levels, you could look to short it, but at the moment it looks like it's in a strong short-term uptrend.
So finally, Yen, your opening calls for the ASX 200 this morning.
We're calling the market just a touch higher, up 0.2% at 5,173. So this is a slight improvement from a pretty disappointing session yesterday, where we just opened lower and basically consolidated slightly above 5,150. Of course, if we do move higher, then resistance is in that 5,200 level, which we just tested the other day and struggled to hold above that level. But of course, it's going to be a difficult task, given most commodities actually struggled overnight, and of course we have seen a bit of a fall in BHP and Rio. BHP's AGR is actually pointing lower by about 0.3% as well. So that should be a bit of a tough start for the resource names. Gold is back below 1400, of course, on slightly reduced Syria fears. It seems like the safe haven trade is unwinding, and that also extends to the yen, which lost a bit of ground as well. So it looks like the resources will be slightly lower at the open. At the same time, with the reduced chances of a rate cut in November, then the yield play looks a bit less attractive. So the banks might not be as strong as we've seen them in the past few months. So it does certainly look like we're in for a weaker, we're in for a stronger start, but with relatively weak leads all round. And of course, with the lack of real company news to drive us higher, it's really hard to see where the positive leads will come from unless Japan fires on all cylinders today.
All right, Stan, thank you so much.
Cheers, Brady.
Stan Shamu there from IG. All right, let's just remind you what we saw on European markets too overnight. We had gains of about 0.2% for the DAX, the FTSE 100 up 0.1%. But as Stan mentioned there, BHP shares struggled in London, trade down 1.7%. Rio, though, was up 0.7%. There were more encouraging